Let me quickly take it across to Anisha and Nikunj and talk about the stocks that you need to keep on your radar this morning.
Well, Aisha, apart from the result reactions that you talked about, there's one sector which has been chugging along very, very smartly, and that's the entire railway stocks as well. So let's start with talking about that. And RVNL is the poster boy, Nikunj, wherein we have seen a surge of 70% in 1 month itself. Is it the case of rising tide taking everything higher, or is there a structural story here as well?
Anisha, look, the surge in some of these stocks has been extraordinary. Now, there is definitely a lot of merit in saying that if there is one government pocket where the capex cycle is going to be a multi-year capex cycle apart from defense, I think it's railways. There is absolute merit in assuming that these tiny toons now are going to be some of the big names. They are no longer tiny toons now. They've become almost teenager size now, but they would be big companies. But the surge in last 1 month is not coinciding with anything which has become so dramatic or anything in terms of on-ground reality which has changed. What has changed, I guess, is that the markets are now running out of options where they can really find some value and long-term stories. My challenge with some of the railway stocks is that while the long-term picture and everything I think is important, and the capacity utilization, the bent of the companies, everything is moving in the right direction. But these are long cycle capex, which is that you get ordered today and you will be executing in 2 to 3 years. And FY24 and FY25 may not see that kind of an incremental benefit, which means that while the big picture argument for some of the railway stocks is absolutely intact, but you got to ask yourself is that how much of that is in the price. When you're an investor, the only thing that matters is at what price you're buying. And I think right now the price in some of the railway stocks is not that great. Now, why are we bringing out some of the delivery-based averages here? That's largely because the day trader now is very active and the delivery-based buying is slipping. So volumes are rising, delivery is falling, and the day trading has started picking up. For me, that's always if not a red light, but it is always a yellow light.
Yeah, always an amber light that there's a lot of that trading activity rather than the investment and long-term bets that people take. So that was about the railway stocks. But the other one that we want to talk about is also Dabur. The numbers yesterday looked optically very weak because the margin performance was not that impressive. And commentary on the con call was also a bit mixed. They're talking about rural recovery, but that inflation is going to create a problem for them.
So I think the way I see the Dabur stock moving is a near-term underperformance, which will give you time to accumulate. Some of these businesses are cyclical businesses, but they're structural businesses. The structural businesses go through cyclical downturn. You should always invest in a good structural business when the cycle
is on
the lower side. So when these great businesses, they go through temporary disruption, that's the time to buy. Will the rural economy be in a much better shape if you have a good monsoon this year? The answer to that is a firm yes. Are pressures, coming down in terms of the commodity pricing? The answer to that is yes. Have they gained market share? Of course, yes. Now, because they've missed the EPS by such a yardstick, brokerages would be forced because, ultimately analysts are slave to numbers. When your assumptions are changed, they will have to change the forward-looking assumption. So that adjustment will have an impact on the stock in the short term. But if there is a big fall, if there is a markdown because adjustment, if there is a sell-off because of the markdowns, what analysts have done, I've got a Macquarie report, EPS cut. I've got a Morgan Stanley report, EPS miss. Nobody's saying any good thing, right? And that's the time you buy some of these great companies.
You go contrarian and buy. So Dabur perhaps is a good structural story. Maybe a one-quarter blip, but maybe...
Samaraval is a large holding in it.
Let's ask him that then. Sandeep, what's your take as far as Dabur is concerned?
I think I have nothing to add beyond what Nikunj said.
You and me have agreed. It's rare. It is very rare that you and me agree. Yeah. I think we're making it a habit now. So let's agree that you will be in the studio also.
Yeah, so we agree to disagree.
See, back to square one. But Dabur, Sandeep, if it falls, you'll buy?
Yeah, so Dabur, the results were results were sort of expected, but I think they missed on the bottom line because they did a significant amount of new promotions, and that's what I thought when the results came out, because volume growth has been so subdued for many companies that they'll need to push sales in order to maintain market share so that they are ready whenever the upturn comes, so they are ready for growth. And that's what I think Dabur seems to have done. So because there was a miss, so we could see some period of, like you were mentioning, consolidation or correction, and that could give an opportunity for new buyers, because overall Dabur is a very good company with very strong brands, and their success rate in launching new products and brands and making them a success is actually much higher than many of the other companies. So I think that's how I'll see it. No near-term triggers for the stock to move up. So whoever needs to buy, they can do it very slowly over the next few weeks.